Alright, so let's see what is happening on gold. Let's see what is happening on gold. Now, for gold, you already know that overall it's bullish market structure. So, looking at gold on the monthly time frame, we have the monthly high and then the monthly low. Okay, so we start by marking the monthly high and the monthly low. First thing, you zoom the chart so you can see clearly. After marking the monthly high and the monthly low, you're gonna pay attention to this overall structure, this overall direction. Now you'll agree with me that the overall direction of gold, okay, the overall market structure on the monthly is bullish. This is the overall market that we are talking about, is bullish. So as we understand, meaning buyers are in control. The next thing we want to understand is the location of the current price. So the question is, where is the current price? You'll agree with me, the current price is at the monthly resistance, even though we are seeing some kind of rejection from there, but current price is there. So overall structure bullish, current price at the monthly resistance. End of the story. From there we move to the weekly time frame, trying to confirm what is happening on the monthly or what we saw on the monthly. Now this is the structure on the weekly. We have a lot of weekly lows over there, a lot. Okay, but do we need to mark all of that? No, we don't need to mark all of them because the current price is far gone. So we just mark at least two. So I wanna take care of this. So we have weekly low, weekly low. After marking that one, what do? You now zoom your chart. So this is good on the weekly time frame. Let's zoom the chart so we can see what is happening clearly, so you don't lack detailed informations. Now after zooming the chart like this on the weekly time frame, what is the market structure again? Let's pay attention. You can see it's still bullish where we have the high, the low, higher high. Market is probably dropping to give us higher low, then another higher high to the upside, meaning the structure is still bullish. Okay, but for the current price, we understand current price hit the monthly resistance, got rejected, coming to create at least weekly low before giving us another high to the upside. So there's a weekly low over there already. Good. So now let's mark it. After marking it like that, what again do we need to understand? There's nothing to talk about again. Structure is bullish. Current price hit the monthly resistance, got rejected, created a weekly support. So from the support, we can be anticipating further buying opportunity to the upside. But we can't conclude or take a trade on the weekly. Let's move to the next smaller time frame, which is the 1D. So on the 1D, we can go ahead and zoom the chart. On the 1D, let's go ahead and zoom the chart. Okay, so this now, let me adjust this. This is good on the 1D time frame. Now on the 1D time frame, we have 1D, 1D low somewhere here, another 1D low to the downside. Okay, that's fine. Now the overall structure is still bullish. Okay, as you can see, we have the high, the low, higher high, higher low, higher high, higher low. So from here we can be anticipating another higher high to the upside. Are you fired up? So we just want to understand, okay, each and every time frame. Make sure you understand the market structure, then you follow in that direction and you're going to succeed. Okay, so now but if you look at what is happening here, I can see there is a resistance over there here like this. There's a rejection showing over there, so permit me to mark it. I can see it, so let me mark it. There's a resistance over there. Good. Now after marking it like this, please don't say the drawing is becoming plenty so you are confused. No, these are all valid key levels, so we need to mark them so that next we can pay attention to them, because the next time I get to get there, definitely there will be reaction. So let's move to the 4-hour time frame. Now the 4-hour time frame, this market, is it ranging? Look at the current structure. No, it's not ranging. It's forming a pattern. This is inverse head and shoulders pattern. Okay, this is an inverse head and shoulders pattern where we have the first shoulder, we have the head, and the final shoulder. So market is currently forming an inverse head and shoulders pattern. That is good. Now, where is the neckline? This is a neckline. Why do you need to pay attention to the neckline? Because the pattern is not confirmed until market break the neckline. So as current price is here like this, market need to move to the upside, break above the neckline, give us a retest, then we get a very juicy buy to the upside. Okay, so if the pattern, if the neckline market doesn't break the neckline, the pattern is not valid, okay, or confirmed. Yeah, so now currently you can see where the current price is. So let's see how we can capitalize on this current price from here to the neckline before markets trying to break above the neckline. So let's see how we can capitalize on that. Let me remove all of this. So let's see. So trying to capitalize on it, we're going to mark it. So let's mark the low, and let me adjust it a bit to cater for this lows down. Good. Now remember we are on the 4-hour time frame and we're supposed to have our zone over there. Now we have resistance key level at the top, we have support key level at the bottom. Look at the location of the current price is here. So you can see that the current price is closer to the support key level as compared to the resistance at the top. Okay, for that matter, the key level that is closer to the current price, we make it a zone. So meaning we're gonna add another key level to this one to make it a zone. We don't just add it because you feel like adding. No, you open your eyes clearly and then you cater for the necessary candles. Good. Now there is a high here. Let me cater for this. Good. So after marking the zone like this, don't do anything again, just look to the left. Okay, look to the left to see if the zone is making sense or if it's a valid zone. Looking to the left, we are looking for multiple contacts, or we want to see if there is. If I see here we have support, here to support, over the support, so currently support. When we further check to the left, here inside like this is making sense as a resistance. So we have previous area or zone of resistance that tend to support over here. Okay, and anytime market tap into the zone, you can see rejections. Right, so the zone with multiple contacts like that, the zone is a valid zone. So from there we move to the 1-hour time frame. So this is now good on the 1-hour time frame. So you can see the inverse head and shoulder, this, and that. So that is the inverse head and shoulders pattern that we saw on the 4-hour time frame. Are you fired up? Now on the 1-hour time frame, what do? We work on the zone. If the zone is too small or is too big, or if there is any correction that you need to do, you're gonna do that on the 1-hour time frame. Now looking at my zone here is making sense. There is nothing wrong with the zone. For that matter, I'm going to go ahead and color the zone so like this. So that is the zone that we have now. Now market is at the support zone, meaning we have no business looking for selling opportunity over there unless you want to set record. But please follow the pattern, don't set a record because you pay for it. Okay, so market is currently at the support, and you know the principle, you know the pattern that we trade. So at the support like this, before we can take a buy, we need to see what rejection and a retest, meaning market was initially selling before hit the zone with bearish momentum. So you need to give us a rejection to the upside, another retest to the zone. After the retesting the zone, we are now seeing double bottom, which is a potential reversal pattern. From there, we see market moving to the upside, and we take our entry upon break of the neckline, break of the previous high over there. I hope it's making sense. Now the reason why we market need to give us that reversal pattern before we can follow is that markets initially selling before hit the zone got rejected like this. So this market, sometimes market just got rejected in order to gather the momentum. The next thing you're gonna see is boom, break below the zone, give a retest and continue moving in the favor of your stop loss. Okay, so that means this rejection that you are seeing over there becomes a fake out, fake you out. All right. So we don't want this thing to happen to us. That is why we need to, because market cannot just reverse without giving us reversal path. If you want to reverse without showing any sign it should reverse, we are not interested. That is not what we trade. Okay, so in short, for me to take a buy on gold, market is at the support, so I need to take a buy or looking for buying opportunity here. So markets drop aggressively with bearish momentum, hit the zone, got rejected, moving to the upside like this. This rejection is an impulse move. I am not interested. You too don't be interested. Okay, that is an impulse move. Wait for this market to pull back to retest the zone like this. After retesting the zone, we are now seeing double bottom, first bottom, second bottom. Now if you see this double bottom, which is a potential reversal pattern that is formed at the support like this, it's only giving you a hint, information that market is about to reverse. It does not confirm the reversal yet. Okay, so you still have to wait until you get your final confirmation. So before you can get a final confirmation, you're gonna see from the zone, you're gonna see two confirmations before the final one, making total of three confirmations. Okay, so the first one is all these candles with a long lower wick, long lower wick. All right, long lower wick. You're gonna see it from here. Sometimes market can print a morning star over there. Sometimes market can print bullish engulfing pattern over there, meaning but there's a buying pressure at the zone pushing the price to the upside. That is the first confirmation. Second confirmation is going to be series of bullish candles. You're going to see the first, second, third candle, they are all going to be bullish, meaning buyers are in control, pushing the market to the upside. Are you fired up? Now what is going to be the final confirmation? Break of the neckline. We wait for the neckline to break, which is break of structure, and that is our entry criteria. So we take the entry upon break of market structure like this, because market structure break of structure, break of structure indicates trend continuation confirmation, trend continuation confirmation. So before I can take a buy on gold, this is what I want to see. This is the pattern that I trade. If I get it like this, it's over. Setup becomes A plus, constant. All right. If I don't see this, then I still have to be patient enough to see what is happening before I follow. All right. So we wait for the market to act, then we react, because the market structure is not our friend, it's our leader. Okay, so we follow our leader in that direction. Now remember the resistance over there. This resistance over there is the neckline for the inverse head and shoulders pattern that we saw earlier on the 4-hour time frame. Are you fired up? So we're going to put our first TP over there, and then if market is able to break above the neckline, then we're gonna put our second TP looking to the left, the next resistance over there. Okay, yeah. Now your stop loss, don't forget, below the zone. You should not be too closer to the zone. Make sure you leave space for manipulation to avoid stop hands or liquidity hands. All right, so yeah, so that is my full technical analysis. That is my full technical analysis on SAUUSD. Currently we are in a weekend. All right, so gold is currently not moving. Gold is currently not moving. So when market open, yeah, this is good, this is good. So if market open, this is what we want to see. All right, sometimes you waiting for market to retest the zone, sometimes market can go down all the way for liquidity hands. That one, if you see the reversal and break of structure like this, that one becomes constant, like A plus, because market already went down for liquidity. So any entry that you are taking over there, you are taking it in peace, without a fear, alright, without any fear or favor, but on risk management. On risk management. So that is my full technical analysis on gold. Anything apart from that, signing out.